This is the Debunking Economics podcast with Steve Keen and Phil Dobbie.
The Archives.
Episode 60, Bitcoin and the Future of Money.
Welcome to the Debunking Economics podcast with Professor Steve Keen, and I'm Phil Dobbie. And today we look at Bitcoin. What's it all about? I thought it started out as a means of buying stuff online, but it seems to have become a currency that's traded and little else. So is there any future for Bitcoin, and what does it mean for sovereign currencies controlled by central banks? Could we ever see a true global currency? That's today on the Debunking Economics podcast. Well, since the days of fiat money, we've seen the amount of money in circulation multiplied manyfold, and we've talked about how it's generated by governments through their central banks, but also by commercial banks. But we also have Bitcoins, created in 2009. Many of us have probably never traded in it. But isn't it also new money, not created by government or banks? And if everyone started using Bitcoins, what does it mean for sovereign currencies? So Professor Steve Keen is with us again, of course. So Steve, first of all, is it new money? Is it actually adding to the amount of money that is in circulation?
It is if you can actually buy something with Bitcoin directly. That's the real story. If you go to the local shop and you buy with Bitcoin as opposed to buying with pounds that you've got because you sold your Bitcoin, then you have created new money. And this is where Hyman Minsky made this point in a little throwaway line. So a few decades ago, anybody can create money. The difficult part lies in getting it accepted. So for you to actually have that Bitcoin turn into genuine money, you have to find somebody else who's willing to accept that as payment for whatever you're buying. Now, we do know of a famous case of somebody buying, I think, a couple of pizzas with some hundreds of Bitcoin, where if they hang on to those Bitcoin and didn't actually use them, they would now be worth like $5 million, from $5 to $5 million. And this is both a strength and a weakness of Bitcoin. So it was accepted for that transaction for pizzas all that time ago. You can use it to buy stuff today, but people would rather hoard it and see the price go up.
But why do they accept it? It's and I know. Look, part of the reason it was devised initially, of course, it was really to demonstrate a technology more than anything, wasn't it? Rather than for any economic reason, it was here's a way. It's almost like a peer-to-peer relationship that creates money. So I'm sure someone created it really as for mental stimulation more than anything else. But why did it catch on? Why would suddenly people go, well, okay, this is a new currency, let's believe it?
I think partly because one of the elements that's quite common in the social periphery is the belief that gold should be or is money, and it was all being debased and it's all been turned into this terrible fiat stuff we have to get rid of, et cetera, et cetera. And we don't trust the government, we don't trust the central bank, yada, yada, yada. And in that basis, this was seen as a solution that melded both of those elements, because since it used the blockchain technology, which was the real technological advance of Bitcoin, since it used the blockchain technology to guarantee that a transaction was valid, and also to maintain a complete data trail of all transactions that were ever taken by any Bitcoin whatsoever anywhere on the planet. Those were technological advances that attracted people, but it was also based on an analogy to gold. And this is the funny thing about it. We talk about Bitcoin mining. Well, of course, they're drilling holes in the earth. You're drilling for zeros, effectively, along strings that generate zeros, which are highly improbable. And therefore, once they're confirmed, you found one of the new Bitcoins, and there's 21 million of them. Yeah. And this was based on an analogy. There's only a finite amount of gold on the planet. But I've always seen a couple of flaws with that.
Because that is the idea, wasn't it? That it's limited. There will always only ever be, as you say, 21 million. So I guess it is a bit like the gold standard in that it's not going to expand.
No, well, it won't expand, but other forms can come along quite happily, thanks very much. Yeah. Anybody else can use. There's Start Coin, there's Join Coin. I've forgotten. I think there's about 20 different variations that exist right now. And I've been invited to go and speak at a conference of digital money developers and the public in a couple of months' time somewhere in I think it's in Birmingham. You can tell me how far that is from London. I don't actually know. But
far enough to be comfortable.
There you go. I can sit on a train.
Apologies to anyone listening in Birmingham, but an hour and a half on the train,
there
probably.
There you go, 2 subscribers straight away. It's But the person who invited me to the thing then mentioned, have you heard about, I've forgotten what it's called, Blarcoin? And I said, no, I haven't heard about it. I'm not particularly aware of the complete ecosystem of blockchain currencies. But this is the point. It is impossible to make more gold. Well, it's possible. It's a bit difficult, however. What you have to do is, first of all, grab two neutron stars, shove them together, and then collect gold out of the explosion, the catastrophic explosion that would destroy the galaxy in which those two neutron stars exist. Grab some of the gold, and bang, you've created more of the gold.
Easier to create money out of nothing, is what you're saying.
Exactly. Well, it's easy to create another blockchain technology, and therefore there's not just 21 million bitcoins. There's God knows how many of the other Startcoin, Joincoin, Blarcoin, Debunking that have been created. So you don't have the uniqueness of gold anymore, and that's one thing which is always, always a weakness of imagining you can create a digital equivalent to a physical commodity.
But if we did see a lot of this, and Bitcoin, I guess they arbitrarily said, yeah, we're going to have 21 million coins. They could have said, well, we're going to have 50 million or 100 million. Or could they actually say, we're going to have 100 million, then we're going to have 150 million the year after and 200 million the year after? Or we're going to change it, based on how we see the value of our coins. Let's behave like a central bank, in other words. So if this catches on, doesn't it sort of devalue the role of sovereign currencies a little bit?
Only if it works. And this is the other side of it, because you have to have a digital wallet to store this stuff. And the digital wallet can, of course, the initial ones were created just for Bitcoin, but you could have other sorts of coins there as well. Then you start getting questions of arbitrage between the different sorts of coins, et cetera, and you start getting an extremely complicated ecosystem, which means that it's a very complicated task of working out which particular money you want to go and buy that next soy latte with. Right. And this is one of the dilemmas that I see when you see what actually is money is more than just something which somebody accepts for transactions. It has to have a range of other characteristics to make it work effectively as money. And one of those is stability. You don't want to have to go out and take twice as many coins as you knew you used yesterday to go and buy coffee in case it's twice as expensive or half as expensive perhaps in the currency you're actually using. So even though we complain about inflation, which I think is still ridiculous because we're living in a deflationary world these days, but nonetheless people will whinge about inflation reducing the value of the dollar. It's consistent. There hasn't been periods of rapid inflation and deflation within minutes of each other, but that is the realm of the Bitcoin technology when you look at the prices being paid for Bitcoin. So that stability doesn't exist there. And then the other advantage of money is that it's simple. It's when you walk into a supermarket, you are confronted with 10,000 potential choices. Of course, we don't think like bloody economists. Otherwise, we'd die of anorexia before we got down half an aisle. So we use habit to get through all those particular decisions. But it is still, money is not one of those decisions. You just know, you walk past, you see what's called, and this is again where the theory of pricing gets in the way, and the theory versus reality. When you walk down the aisle, you'll see, this is actually an example I find quite amusing. I love coconut water. I'm a junkie. Right. I love the stuff. Okay, it costs £3.75 in my local co-op and £2.75 in the local Iceland. Now, that's ridiculous that there's a bigger difference in how much markup is applied, but the price doesn't vary. If I go and bought the entire stock of coconut water from Iceland, the price would still be $2.75 after I walked out the door. They wouldn't raise the price again. So this stability of pricing is an element most of us face, not market supply and demand driven prices. We face, I've forgotten the actual term that the non-neoclassical economists gave forward, administered prices. That's what a guy called Gardner Means did back when he examined the pricing system in American capitalism in the 40s and 50s. He said we don't have a floating free market supply and demand determined price system. We have administered prices. They're declared, they're set, and they stay that way for some substantial time. Now, the Bitcoin world is again based on this vision of supply and demand type prices where everything varies all the time and we're rapidly trying to work out the best possible price. It would be a pain in the tit to have to do that every time you went shopping.
Right.
So these are practical physical elements of the current behavior of Bitcoin that I think get in the way of actually becoming genuinely money that would replace fiat money.
Okay, well, you got me a little bit confused there, because why is Bitcoin, if I buy...
Good.
And it's bound to happen sooner or later. Actually, it happens more often. I just don't let on.
I had a giggle in the background a while ago, yeah.
But if I'm using a Bitcoin online to buy something, and I understand most people actually are just trading in it rather than using it to actually buy stuff, but if I bought something online, isn't it a set price? So many Bitcoins, I buy it that way, and it doesn't make any difference whether it's a Bitcoin or I'm paying the price in Australian dollars, does it?
I think, if you're buying a physical commodity, then it is going to vary depending on the price of Bitcoin. And one thing people are selling all the time as a sign of how good Bitcoin is how much it's appreciated compared to everything, including gold, in the last 10 years, or however long it's existed.
So what?
But I mean, that is part of the instability.
Okay, but that instability applies with any currency, doesn't it? The price you're paying in Australian dollars will depend on how strong the Australian dollar is and whether you're getting a good deal or not based on the strength of the dollar. So it's the same with the Bitcoin. But I think your point is the Bitcoin is continually going up.
Continually going up, and it's going up compared to everything else, but it also has had very significant crashes at various times. Now, if it's going to generally become money, it's got to stabilize.
Right. And is that a fact of scale?
Scale of adoption, but it's also, would you use it regularly for transactions? Would, again, my local coffee shop, is it going to declare a price of coffee in Bitcoin? Now, if it did for a start, the price couldn't be administered because given the current behavior of Bitcoin with the price rising all the time, you'd have to have the price in coffee terms falling all the time. So they couldn't actually write a price up on the blackboard in that sense. But the second one, which is something I wasn't aware of until I worked with a couple of companies who are actually developing other blockchain technologies. Do you know, I don't suppose you do know, I'll ask you anyway. Do you know how long it takes to actually verify a Bitcoin transaction?
Well, surprisingly, the answer to that question is no.
There you go. The answer is 10. I thought it would be in the order of milliseconds. It's 10 minutes.
Wow.
Okay. Now, therefore, if you actually use this for regular transactions, there's no way you're going to wait 10 minutes to get it verified. Now, I find it a bit. So it's not going to be used in this for high frequency trading then? No, it's far too. It is deliberately. This is why it costs money to mine Bitcoin. This is why apparently the world's major Bitcoin producers, so-called, are based in Outer Mongolia right now, and they're paying their workers lousy wages and not air conditioning they're being air conditioned by the heat of the heat sinks from the computers that are being used to try to find the prime numbers that generate the next Bitcoin out of the ether, but. They are incredibly energy intensive, and there's a positive and a negative to this. So as people point out to me, yes, it's energy intensive, yes, it takes a long time, but it replaces the back office that banks currently use to verify transactions. If you imagine going down to the coffee shop to buy your soy latte and you have your debit card and you tap it on the screen, that is going back to a centralized system which verifies it's probably you using the card. It's probably a genuine transaction. We'll approve it, and it goes through in a matter of 2 or 3 seconds. If you're using Bitcoin, it's going to take 10 minutes. So again, there's now a business of pre-verifying transactions in Bitcoin, and the person who's pre-verifying is taking the risk of actually fraudulently using somebody else's Bitcoin to buy that soy latte. Right. But at
least they've got time to make a decent soy latte, haven't they? But with very often soy lattes, but very often in this country particularly, they press a button, it's there in 1 minute, and it tastes bloody awful. Whereas in Australia, you could spend 10 minutes on a soy latte and it would taste good at the end. But we digress. I thought you're talking about people generating bitcoins. I thought of Bitcoin. There were 21 million of them. They existed. They're not physical coins. No, I'm wrong on that.
What they are is fundamentally based on prime numbers. I don't actually know. I haven't checked the algorithm itself, which I could do one of these days. But the basic idea is combinations of prime numbers are incredibly hard to locate. There's people might know what's called the sieve of Eratosthenes, which is the first way to try to work out what a prime number is, a number which can only be divided by itself or one.
Yeah.
Okay. And getting an integer answer. And there's what's called the Riemann calculus, which is used to estimate roughly where they are. The roots of what's called the Riemann integral, I think, are the easiest way to approximate where the next prime number is going to be. You've got to basically go through all the numbers, all the integers, trying to find one that can't be divided by any of the integers below it except one. Now, that is an incredibly time-consuming process. And we actually, these days, when a new prime number is discovered, because we have gone so far into working out what these are using computing technology, when a new prime number is discovered, it's actually a news item.
Right.
Now, when you then multiply...
And it becomes a new Bitcoin.
No, hang on. You're jumping ahead there, mate. Hang on.
All right, okay.
Multiplying sets of known prime numbers together can generate new combinations, new numbers, which you then have to work out whether that number is generated with a particular number could be factored by a number of prime numbers. And that I believe, and I'm happy to have people in the Patreon community correct me if I'm wrong here, because actually I've been quite impressed with some of the feedback I've got from Patreon users who clearly know more about engineering than I do. And there will be people who know more than computing than I do as well. So feel free to add comments here, everybody. But that is the basic story. It's using combinations of prime numbers, and the difficulty of locating what prime numbers generated that actually work to generate the next thing in the blockchain technology behind Bitcoin. What you get is a set of zeros that precede a transaction. And it's also a collective effort to verify that a transaction is actually valid. And this is the part that I have had explained to me before, but I'm sure, again, somebody in the Patreon community will give a better explanation. But you have to generate a whole series of zeros.
Right. Okay.
And the probability of doing that is the random numbers that do that are highly improbable, and therefore you verify the transaction.
So have I got this right then? Irrespective of how it actually works, it's an algorithm, and
absolutely.
So some Bitcoins have been created. The algorithm has been created. That has been arrived at. A solution's been found. Bitcoin is created. It starts its life. It gets exchanged. It keeps on going up in value because of the way investors work. And if somebody else discovers a new one that matches this algorithm, then congratulations, you've just landed yourself a fortune based on whatever the present value of Bitcoin is.
No, it's exactly the first part is correct. The second half is that the verification process verifies that a transaction using that Bitcoin is actually a valid transaction to avoid fraud.
Right. So how is it expanding then?
Two ways. People are actually out there mining and trying to find new Bitcoins, and they then sell them into the universe of Bitcoin buyers at the current price of Bitcoin.
Right.
So that's where the profitability from the miners comes from.
And how are they mining it? Aren't they just finding something that matches the algorithm? Isn't it?
Yeah, exactly. To do it, you've got to go through. It's brute number crunching.
Right.
They have enormous arrays of computers just grinding through finding numbers and seeing whether any of them actually match the algorithm. And it's enormously, it takes 10 minutes on an array of supercomputers. Actually, that's to verify. To actually find a new Bitcoin, I don't know how long it's taking now, but it could be weeks, months, that sort of thing, to find a new Bitcoin.
Okay, so what's the point? I mean, if it's not there as something that people are going to physically used to buy stuff. I mean, I thought initially that the whole idea of Bitcoin was, we all buy stuff online. Here's a currency that you could use online, and perhaps it makes it easier that we all trade a bit like companies used to trade with the ECU before the European Union started. It's easier to trade in a shared currency rather than cross borders using different currencies. I thought initially when I first heard about the Bitcoin all those years ago, that was the idea behind it. But it sounds like no, it's in a way it's intellectual stimulation for some, and now it's being used by traders rather than as a substitute for gold, in effect.
I think that's really what's happened, because there was the potential to go in either of those two directions. There could have been a whole new basis for transactions, and that would have been an interesting challenge to the fiat money system. Instead, it's become, because the price continues rising because of speculative buying, it's become another gold. It has potentially become another tulip. And this is the question. If it never actually gets used for transactions on a grand scale, then it's simply a speculative commodity. And if people ultimately at any point lose any faith that it's going to continue rising in price, then it can fall as much as tulip prices did. And that's the worry. There have been a couple of serious crashes in the past. But the main thing that keeps it going, I think, is first of all, the fact that it is rising. That's the positive feedback loop, which is itself a danger. But secondly, there's so much chaos, which is quite evident in the monetary systems around the world, the actual fiat monetary systems, that continues giving credibility to something which doesn't require central bank banking, which is not created by private banks.
But it's also expanding in number all the time then?
Not a lot.
Right.
This is the whole thing. The
ticking
initial,
over slowly.
The initial Bitcoins were easy to locate because you're working with smaller, so imagine with smaller combinations of prime numbers. Now, as the algorithm goes further, that's why I said there's apparently 40% of new Bitcoins, and there may be lots of them produced. Again, I'm not aware of the volume. Again, I'll let listeners fill me in on the actual details there. But the Bitcoins are now, apparently 40% of them are being produced by a set of data mining systems based in Mongolia for both cheapness of labor and cheapness of energy. And that's where most of it's coming from. And that's also raising a range of issues, too, about just how much is the market being cornered by particular nationalities. So it's a much more complicated story than just the algorithm, and here's a nice way to provide an alternative to fiat money.
So what about, away from Bitcoin, what's to stop somebody like Amazon, well, probably actually Amazon, or eBay, somebody who has a lot of online transactions, and we've sort of got it in a way with PayPal, saying, well, let's facilitate a payment system that can be used online, and to get over this fluctuation of currencies from people buying internationally, let's create our own currency. And all of a sudden it becomes, if it grows to scale, it becomes, one of the world's most dominant currencies. Couldn't that happen?
But yeah, that's another feasible combination, because the blockchain technology itself doesn't have to be run by a decentralized organization. It could be centralized. And I think if it was centralized, it'd be much, much faster to verify. And therefore, that 10-minute delay may be replaced if you had PayPal producing its own currency. At the moment, of course, if you use PayPal, you get American dollars, whatever, English pounds, Australian dollars, whatever you've actually got your payment in, that's the form in which it's stored. And that's also another way to verify. But the money itself is being created by the private banks and by the central banks of those countries.
I mean, it could be they become a bank. We just exchange money between us. We buy stuff using PayPal dollars or whatever they might be called, and we buy almost everything through Amazon using PayPal dollars. People buy stuff, make stuff using suppliers that are paid in PayPal dollars.
Yep, that's all feasible.
Right. And what does that mean to governments and central banks and the sovereignty of currencies?
Well, again, you've got to be using something other than the national currency for that to actually be a challenge. And in that sense, probably the real challenges are being faced not by the governments themselves, but by the private banks. And I think the main place where this is happening is actually Africa, where a lot of people are using money created by telecommunications companies to make transfers on their mobile phones, because there are virtually no, compared to population, compared to what we're used to in the West, there are virtually no bank branches in Africa, but there are virtually everybody has a mobile phone. And some of the neatest technology I've heard there is on occasions to enable the transactions to occur because you don't have the same digital network again. Some of the software involves putting one phone next to another, and one phone will generate a sound tone which has been scrambled, and when it's decoded on the other side, that verifies the transaction itself. So they're actually using audio to enable people to use old-fashioned non-smartphones to make those transactions. So the real challenge there, I think, is to the banks themselves, because a large amount of the money they make out is out of the simple transactions you and I do on a daily basis, charging fees on it. If that went across to telecommunications companies, or indeed to Amazon, that would reduce a large part of the profitability of these banks. And that, I think, is probably a more interesting challenge in the long run than Bitcoin itself.
But it would also remove the influence of central banks, wouldn't it? I mean, maybe they haven't got as much influence as they think they have anyway. But it would put an awful lot. I mean, if it became a dominant currency, it would put a lot of world power in the hands of these corporates, wouldn't it?
Yeah, but it's still at the moment it's still a system for transacting in existing fiat currencies, and central banks have already abrogated that power to a large degree by falling for the whole line about austerity. And believing they can control everything using the interest rates rather than worrying about the quantity of money. So I think they've already lost that particular field. The real challenge, as I say, is the one people who are in that field creating money are the private banks. And if instead people start using telecommunication system for transactions rather than the banks themselves, then they've got a serious challenger in terms of taking over their market share.
Right. And how inevitable do you think that is? I mean, you're saying it's already happening in Africa, but what about in the West?
Well, it would then come down to the cost of transaction because, again, we're used to. I mean, you look at your credit card bill. I keep mine, pretty close to zero all the time. But the rates of interest on credit cards are 14 times the reserve rate. You're looking at rates of 25% quite frequently on credit cards. Now, and they make money out of the transactions as well. Though when you go do any shopping as well, there'll be a little transaction fee charged by the bank. They add up. Now, if the telecommunications companies come along and have better infrastructure than the banks and charge at 1/10 the rate, then part of the profitability of the banks becomes challenged. And that's when you're likely to see some real fun. I think that's more likely to be a serious challenge to the banking system's monopolies than Bitcoin has turned out to be.
The reason I was asking about whether it could be abused by corporates that start to operate like eBay, for example, or PayPal, who create their own currency and it becomes very dominant around the world, then presumably they could start behaving like central banks and they could start saying, well, look, let's weaken our currency now in the same way that central banks do to try and make exports, or in this case, the purchases of goods using our currency more cost effective. So things appear cheaper if you're using our currency rather than using any other currency, or indeed buying anything through other channels like through department stores and the like.
Yeah, but if you're doing it at that scale, the potential for it to be exposed is extreme. Whereas what actually happens with the fiat money system, I'll be talking about this on Russia Today tomorrow on the Boom Bust Report, is that, for example, the London interbank offer rate was used as the basis for setting all interest rates in the belief that there were huge numbers of transactions on LIBOR, and therefore it was the lowest possible cost market, and therefore that should be the floor. Interest rate should be set above it. It then turns out that in fact that's based on the whole model that banks have to have reserves to lend, and therefore they're borrowing reserves from each other all the time, and therefore this is a very, very fluid market. That's bullshit, as I've explained frequently on Patreon and my writings. Banks don't need reserves to lend, and therefore the number of transactions is actually quite trivial. And apparently in one of the markets, which was being used to set the LIBOR rate, there were a total of 15 transactions in a year, or 25 transactions, I forgot which, but a trivial number of transactions. So there's more potential for these things to be manipulated in the current banking system than it would be if eBay started producing its own currency.
Well, I guess, yeah, I mean, if eBay says, well, here's our currency, I mean, normally, of course, as we've seen with Bitcoin, people just start trading it, and so it loses all sense of value because of the trading environment. I guess if they say, well, that can't happen, this currency is only for buying stuff through our stores, then you can't see that speculative trading happening.
Potentially, and that's one of the weaknesses of Bitcoin. It's so dominated by the speculative side these days that it's not particularly amenable for transactions. But if you had the same basic idea of a blockchain technology to give you the safety, reduce the need for a back office, so you can reduce your overall costs, so therefore you've got a cheaper infrastructure than the banking sector, and then you want to make it for transactions, so you manage to set up systems that make that block the speculation, and that's quite feasible with a company like eBay or PayPal, then you could actually generate a currency which is used for buying and selling things through PayPal, and then you have a serious challenge to the banking system.
Yeah, well, absolutely. For traders, I mean, you've got a whole load of currencies that people trade in, and another currency that's not being used for speculation, that's presumably holding its value more, is less susceptible to peaks and troughs because it's only being used for transactions.
Yeah, I think that's a feasible challenge. Whether it'll actually happen or not, depends on anybody on Patreon is a PayPal manager.
But the opportunity is there. I
think it is.
Can't help feeling they're working on it. Anyway, a lot more sense than Bitcoin, that's for sure. Good to talk, Steve. Look, next time, we're going to look at the retirement crisis. How did we get into it? How do we fix it? We'll talk about that next time.
Okay.
And for now, that is the Debunking Economics podcast with Professor Steve Keen. I'm Phil Dobbie. We'll catch you next time. Thanks for listening.